It was just revealed that House Speaker Nancy Pelosi's financial husband bought more than $2 million worth of Tesla stock last week. In a recently released regulatory filing, it marks one of lawmakers' largest investments in stocks this year. According to a congressional disclosure document, Pelosi, a venture capitalist, recently purchased 2,500 shares of Tesla stock by exercising 25 call options with a strike price of $500. The call options had an expiration date the next day. The acquisition comes as lawmakers debate whether or not members of Congress should be allowed to trade stocks, due to her position as Speaker of the House and her husband's extensive trade. Pelosi was at the center of the debate. So why this issue? How did Tesla stock perform? Keep watching to find out. Paul Pelosi spent $2.9 million in January on stock in Disney, Apple, American Express, and PayPal, among other companies. The most recent disclosures were required under the Congressional Know-How Trading Act of 2012, which requires lawmakers to disclose individual trades they make by themselves, their spouses, or children within 45 days of the transaction. The Tesla purchase was the latest major investment by Pelosi's husband, according to the Washington Post, who had previously bought out options on technology stocks such as Google, Salesforce, Roblox, and Disney. Tesla shares have risen about 10% since Pelosi's purchase, including 8% on Tuesday alone, helped by a larger market rebound on Tuesday. But the company is still down about 19% from the all-time high it reached in November. This is not the first time that Pelosi has made a huge gamble on the stocks of major technology companies. He reportedly earned $5 million last year from options contracts tied to Alphabet stock, according to the Post. The Pelosi family made up to $30 million in bets on big tech companies throughout January. Insiders accused the Speaker of Parliament of delaying measures that would place additional rules on the technology industry. A request for comment from Pelosi's office was not immediately responded to. When asked by the Washington Post whether her husband's financial dealings presented a conflict of interest, Pelosi spokesman Drew Hamill dismissed the question. Hamill clarified that the Speaker does not own any shares, saying, "As you can see from the mandatory reporting, these transactions are marked as the SP of the pair, with which the Speaker is fully cooperating. The Speaker has no prior knowledge of or subsequent involvement in such transactions." Pelosi initially opposed restrictions on stock trades in Congress, claiming in December that lawmakers should be allowed to participate in the free market economy. After a barrage of criticism, Pelosi changed direction and said she would be open to stronger regulations for stock trading, including a potential ban. Several politicians have introduced legislation aimed at curbing stock trading in Congress, led by Senator John Ossoff, a fellow Democrat from Georgia. According to critics, members of Congress who obtained classified information and developed policy that directly affects large publicly traded companies should be banned from trading stocks. Pelosi was initially opposed to such a ban, but has now softened her stance and expressed interest in the policy proposal. There are many reasons why MPs should not trade individual stocks, according to ethics experts, but the coronavirus outbreak has come into sharp focus following a series of investigations into alleged insider trading by politicians, particularly in the early days of the COVID-19 outbreak. Bills banning members of Congress from trading stocks recently received bipartisan support, including House Speaker Nancy Pelosi. According to voters, lawmakers should be banned from trading stocks while in Congress because their position allows them access to information about companies and industries that ordinary people don't have. This gives them an unfair advantage over the average investor. While some standards are in place to at least provide clarity on how lawmakers can profit from the stock market, there are no serious penalties for breaking these restrictions, Business Insider's Dave Leventhal revealed. Congress's Stop Trading on Knowledge Act has been violated by at least 55 members of Congress in 2021 alone. The Stock Act was passed in 2012 to ban the use of insider information for stock trading, but many lawmakers now say it doesn't go far enough to prevent abuse. In early 2020, when many Americans lost their jobs as a result of the pandemic, U.S. senators made millions after making lucky trades on the stock market. This has upset many citizens, as it should, according to lobbying reports maintained by the nonpartisan research firm Open Secrets. Tesla, which makes electric cars and solar panels, spends hundreds of thousands of dollars each year lobbying the federal government. Some believe that Elon should be flattered by this controversy because it means that Tesla is considered a blue chip stock worthy of breaking the law. How is Tesla's stock currently doing? Although it's unfair for Pelosi to have this advantage, it stands to reason that Tesla would be among the best purchased companies. Tesla has had an amazing year so far with 2 factory launches and a great earnings announcement. However, there has been a struggle for the stock since Pelosi's purchase. The stock fell to $800 again, returning to its previous position earlier this year. The S&P 500 fell 1.9%, while the Nasdaq fell 2% and Tesla stock did not escape the sell-off. In fact, it has now fallen for 3 straight days, falling another 3.8% due to the broader sense of fear on Wall Street. Why are investors so nervous? Concerns about rising interest rates are one factor. The 10-year Treasury yield recently reached 3.185%, its lowest level since 2018. In fact, the Fed is raising interest rates to fight inflation. But because higher interest rates make it more expensive to buy a car or a house, in at least one sense higher interest rates lead to inflation. They also reduce the incentive for consumer spending, which can hurt the economy and possibly lead to a recession when these two concerns, a sluggish economy and inflation, are combined. Investors have a huge imaginary fear of stagflation. In addition to this general apprehension, Wall Street media provided Tesla investors with new concerns over the weekend. First, according to Barron's, GM is increasing its competitiveness in the electric vehicle market by launching the GMC Hummer electric pickup truck and preparing to launch the Cadillac Lyriq electric SUV, according to Reuters. Volkswagen CEO Herbert Diess has pledged to overtake Tesla as the world's largest seller of electric vehicles by 2025. Meanwhile, according to historical data from S&P Global Market Intelligence, Tesla previously demonstrated that it can turn a profit in 2013 and then accumulate a series of 11 consecutive profitable quarters from 2019 to 2022 to establish it can maintain profitability today. Tesla has an operating profit margin of 15.5%, which is twice GM's profit margin and about twice Volkswagen's profit margin. All indications are that despite the competition, Tesla is doing just fine. Tesla's success has been built on the promise of self-driving vehicles, which will change the way people get around. While Tesla's autopilot and full self-driving suites have been relatively successful in recent years, Morgan Stanley analysts are skeptical that self-driving software will continue to fuel the automaker's development and expansion. Instead, the financial institution is betting on what Tesla needs: vehicle manufacturing and other efficiencies, such as material procurement, supply chain, and infrastructure development. It's no secret that Tesla's FSD and robotaxi ambitions have failed, despite Elon Musk's assurances that the company will complete its foray into fully autonomous vehicles in 2018. However, every year comes with a new set of hurdles, whether related to manufacturing or supplying critical parts. Delaying feature distribution, the full FSD suite, or the expected robotaxi fleet. This has led to some doubts about whether Tesla will be able to maintain its impressive growth rate through one channel rather than another, which the company has already proven its manufacturing prowess, according to a new note to investors from Adam Jonas of Morgan Stanley and other analysts. Tesla's real path to further expansion and higher valuations is to focus on what it does best. Tesla has spent the past several years focused on improving manufacturing efficiency and accuracy, which has led to 9 consecutive quarters of vehicle deliveries growth. While this line may be at risk due to the closure of Tesla's most productive facility in Shanghai, there is still evidence to suggest that Tesla's best path to continued growth is through its manufacturing capabilities, compared to nationwide accident data from the NHTSA. Tesla has made significant progress on its FSD program through the test fleet, and autopilot is coming off one of its safest years in history. But it remains to be seen whether Tesla will achieve full autonomy by the end of the year, as Musk expects. Musk remains optimistic about Tesla's FSD development, saying earlier this year that he would be shocked if the company failed to make significant progress and finish the kit by the end of 2022. How do you think Tesla will perform in the second quarter? Will they achieve FSD? Comment below.